Hi, I'm Lauren McKechnie, and this is Financially Fit with Texoma Community Credit Union. Today I have Ken Thomason here with me to talk about loans. Ken, can you start with what you do here at the credit union?
Sure. My title is Executive Vice President and Chief Lending Officer. My functions are being in control over all the lending functions.
So you've seen a lot of people come in for auto loans over the years. Can you give us a little hint on what the process looks like? Where do they start?
Well, the first place that they shouldn't start probably is at the dealer, because they're going to ask, the first question they're going to be asked is, hey, what kind of payment can you afford? And most folks don't know what kind of payment they can afford, or they don't know what kind of car they're wanting. But the best place to start is to come to the credit union. If you've got that relationship with your loan officer already, call them, let them know what you're wanting to do. Let us go ahead and get you a pre-approval if we can, and then you can go shopping.
So we can kind of counsel them on what that payment needs to be for their budget.
Right. And some folks have good enough credit, they can go shopping and they know what they want, and they know how to car buy, and they'll end up with the right vehicle, and they'll have the dealer send it to us, or if they're not buying locally, they'll finance with us anyway. But some folks who need that extra help, they need to start with the credit union first and build that relationship. Yeah.
So what do they need to bring into the credit union when they are starting that process?
Right. We always need a credit application, and from that credit application, we pull their credit, and based off that credit score, it'll tell us really what information we need. The better the credit score, the less paperwork you'll need, and the worse the credit score, more paperwork you'll need.
So once they come into the credit union, how long does it take to get an answer?
Right. Again, if their credit's good, they can have it within minutes, same day. If their credit's suspect, or some things, information we've got together from them, it may take to the next day to do that. Depending on what car they're buying, they may have to not get the car that they really came in wanting, and may have to search around for something else.
So speaking of, maybe not getting what they want the first time, I know we have a first-time buyers program that accommodates that need. Can you talk a little bit about what that is?
The first-time buyers program, it allows you to purchase a vehicle for up to $15,000 depending on whatever your credit score is, the level, whether it's 110% of that $15,000 value or 85% of that value, just depends on your credit. But within a 5-year-old vehicle, you need to be on your job for a year, need to be at the residence for a year. And then what we do is we say, hey, stay in this ride for 2 years, and then we can trade you out, get you into one twice that amount, up to twice that amount. Stay in that one for a couple of years, and then they just build their way up. And then along the process, they've rebuilt credit, or they've built credit one way or the other.
So over those 2 years, they're building their credit, but they're also building a relationship with us.
Yeah.
So I know we have a rebate program too, that if you're starting at a lower credit score at a rate that you may be not happy with, there's something you can do about that, right?
Yeah, lots of folks don't like those higher rate loans, and I don't blame them for that. So we developed the 1-year interest rebate program, to where you say, well, Ken, I don't like that 17% loan, and say, well, Lauren, pay on this for a year for no late payments and no late fees, and then after those 12 months, then you call me back and I'll say, let me know that, hey, you want that interest rebate thing I talked about, and we will rebate the amount of interest that you paid versus what you would have paid at that next level up, which was a lower credit rate. And so then at that point, you do it again for another 12 months, and you may have started off at a 17% rate, and now 2 years later you're into a 10 or 11% rate loan. If you start off with a 10 or 11% rate loan, a level 3, then 2 years later you're at the level 1, and you're getting a 3 or 4% rate.
Well, that's a great deal.
Yeah, yeah. A lot of times the best way to do credit's not instantaneous, and there's steps that you need to take along the way rather than just going and getting it.
It sounds like there's a lot of guidance that our loan officers can provide in that process. And thank you, Kim, for joining us today to give us a hint on what that looks like.
Sure.
This is Financially Fit with Texoma Community Credit Union. Thank you for joining us.